Thanks for joining me again, guys. We're going to start off today's show with some listener mail. This one entitled ASICS or Botnets. Hi all, I wanted to comment on the ASIC debate you've been having lately. I considered this question some time ago, but decided I was in favor of ASICs for a reason you've not yet mentioned. That reason is botnets. Restricting the hashing function to commodity hardware will allocate the biggest share of the network to botnet owners and those who administer big iron. I recall this was the case pre-GPU, and I prefer the current situation over that. Sincerely, Super.
That's an interesting comment. Could an ASIC potentially be compromised or infected with malware that diverts some of or all of its mining power to somebody who essentially owns a botnet?
Sure, absolutely. Why not? I mean, there is plenty of evidence of malware compromising firmware systems. And especially since a lot of these miners are USB devices, the accounting side of things is managed by a PC. Yeah, why not? However, I think the one thing that's missing in both cases is that it would be very noticeable, right? I mean, wouldn't you notice if your ASIC miner stopped paying you?
That's true. And you'd probably notice, like, we talked about this article once, where there was, I think, a pretty famous gaming community of some kind that got compromised by some malware, and this person was using all these fancy GPUs to mine for Bitcoins, and people noticed when their graphics cards started burning out. Yeah, I think it would be noticeable if you were compromised in a botnet, unless they were like super sneaky or you were pretty much not paying attention to it.
The compromise is between super sneaky and profitable, right? Because if you want to be profitable in mining, assuming that the proof of work was CPU friendly, and you want to be profitable, you need to really run that CPU, which is going to show up in terms of heat, in terms of fan noise, in terms of electricity consumption. Unlike Trojans that send out spam that don't really consume too many resources, this would be very noticeable, at least to those who use their systems, because the systems would be quite unusable when these mining machines were running.
You know, I think that that's correct, but it actually sort of further makes the listener's point by moving back to a commodity-based hardware. I mean, because really what we're talking about is centralization as specialization, right? You centralize power by having people specialize in paying attention to this stuff and doing these particular processes and running this particular type of operation. So that means that if you move away from that system, then you move towards a more generalized solution where people who are not experts and people who do not have the sort of skills required in order to be able to, immediately tell that something's going on with their computer are the ones who are potentially being impacted by this. And oftentimes, what I think these botnets hit, they're not hitting people who already have Bitcoin. They are actually hitting people who don't already have Bitcoin, but who have the potential to run Bitcoin if the hardware is powerful enough to do so. That's the primary thing, is just the difference between specialization and centralization.
One of the things that we talked about a lot in our ASICS mining discussion was the powerful incentives that have essentially led to ASICs coming into existence. Just like there are incentives for ASICs to exist right now for somebody to find some technology that does the mining more efficiently so they can get more block rewards and they can get more Bitcoin, there would be incentives for somebody to somehow compromise ASICs if ASICs become the dominant force. So it's kind of only a matter of time. Those things just don't really exist yet because ASICs aren't super prevalent yet, but perhaps they will. I think there's a good chance that they will.
So we always come to the question, if we could turn back the clock and if we could fix the problem so that ASICs weren't a thing and that it was all about CPUs, ASICs and GPUs aren't a thing and it's all about CPUs, then is that something that actually helps the situation? Because, I mean, there are botnets out there that have, more than 3 million, 4 million participants in them. And I think given the relative size of the Bitcoin using community, that in fact would be a dominant force if we were restricting to CPUs.
Well, it will be a dominant force anyway for currencies like Litecoin, Feathercoin, or others that are more CPU friendly in terms of mining. And then the largest botnets are actually in excess of 10 million machines, have been found. Sometimes the sizes are approaching 15 million machines. Most security experts speculate that there's bigger ones that we don't know about yet. I think this is an interim problem. It's a medium-term problem because if you play out this thing over the long term, restricting supply by focusing on ASICs as the major proof-of-work mechanism will essentially concentrate mining in the developed world and keep it in the hands of those who can buy and cannot be banned from buying ASIC mining. In the long term, if you look at CPU mining, the botnets are dwarfed by the regular users of the currency running their own rigs or running their own mining within their wallets. I don't see that as a long-term problem, but it is very much a medium-term problem. The incentives are there and it is going to be used, absolutely.
Okay, but how do we get past that? Because I agree with you. I think that if you play this out, it's not a long-term problem. It's a problem that only happens while adoption is still kind of getting to that point where it's able to break past those numbers that are contained by existing botnets. To the listener's point, ASICs are preferable to that because it's not a distinctly malicious force. Instead, it's just a smaller number of people who are able to control the network, but it's still a smaller number of people. So you've got ASICs as a short-term solution to a medium-term problem. But then where do we go in the long term? Do we use ASICs up through this adoption curve, and then at some point where the using network, where the using populace outweighs the potential of botnets, then do we make a switch over to that? Or, I mean, is this even possible?
You just assume the botnets will happen and embrace that rather than worry about it. You know, if a third of the hashing from the network came from botnets, I don't see what the big deal is.
Right, I agree with you if it was a third, but that's not what we're talking about. If we're talking about a using base of maybe 1 million people worldwide, and you have 3 million or 4 million computer-strong botnet come on board and start mining in a paradigm where only CPUs can mine, then you're not talking about a third, you're talking about 3/4. I mean, am I wrong? Are the using numbers much larger than I had thought?
I think the using numbers are larger, and I don't think you can easily marshal a botnet of that size. But yeah, that's a concern. Again, though, I don't see what problem it would cause, because this is a massively distributed mining exercise that probably doesn't have a single owner. You know, if you had a botnet, the probability of one person controlling all of that botnet and all of the mining that happens through that and being malicious is much lower than the played out possibility of concentrating all of the mining on ASICs that are difficult to get.
That's a good point that I hadn't thought of before. If there's an incentive to create botnets, then that incentive applies to everybody, right? So there could be multiple parties that sort of have like competing botnets. So it's unlikely that one is gonna end up doing, you know, a 51% attack or something.
So those are the facts on the ground. I mean, botnets today are monetized through spam, but Bitcoin is a much better form of monetization. The inevitable future is either botnets and ASICs or just botnets. You don't have a future where botnets don't exist. And if they're not mining Bitcoin, which I think they probably will, even at the marginal utility, they're going to be mining Litecoin and Feathercoin and other coins. So botnets are very much part of the internet computing infrastructure. And I don't have a problem with that. It's a very distributed and diffuse system. But if you concentrate ASICs and continue on this curve, eventually the only profitable ASICs will be very small nanometer feature ASICs that are very difficult to achieve. As a result, you're going to concentrate mining in the hands of the very few. And also you're going to drive the difficulty up to a level where you have the possibility of a significant shortfall in hashing power. I mean, that's my main concern. My main concern is that you take the difficulty up, then a big chunk of the network leaves, either on purpose, maliciously to crash Bitcoin, or for whatever other reason, and suddenly you're left with a difficulty that can't mine you a block for weeks or months. Then what?
So does this change anything? I mean, we've been kind of talking around a path forward on this. You know, we've gotten feedback from kind of both sides of the issue, and honestly, it seems like people are about 50-50 split, whether or not they view ASICs as a concern because of the centralization, or if they think that ASICs are the solution through some manner of centralization, but that after they eventually become very inexpensive and commodified, that that'll be the solution. You know, I mean, again, we talk about the other $6.5 billion. Well, the thought is that if they can afford a phone, and if ASICs become so prevalent and so common, then an ASIC will probably cost less than a phone and actually be able to produce some sort of meaningful value for you. You know, is that a long-term future that could potentially play out too, that wouldn't be so bad? Or do we think that it's much less likely that it would go that way?
The way the double SHA algorithm works is that the orders of magnitude difference between an ASIC and a CPU will continue to persist, and not just that, but you're going to have orders of magnitude difference between a 28 nanometer ASIC, a 25 nanometer ASIC, and a 20 nanometer ASIC. So the problem is you're going to go from, I can buy a 1 mega hash ASIC, but someone else can go out and spend $100,000 and go to a very exclusive fab in South Korea and buy a 1 terahash ASIC. There's only, you know, a few hundred of those. That's what's going to lead to the centralization. It's not just the difference between ASICs and CPUs. It's that each generation of microchip compression and Moore's law advancement actually accelerates ASICs even faster And the double shot algorithm is such that you can optimize it very, very nicely by reducing the die size. I mean, the problem is this algorithm is very ASIC friendly. And the end result is that it concentrates not just in ASICs versus CPUs, but in the smallest die ASIC versus all the other ASICs.
So now we're already seeing movement in the 28 nanometer space, the 25 nanometer space, and the assumption is that we'll see smaller stuff soon. Yes, it can continue getting more efficient, but isn't there a point of diminishing returns in this situation? Isn't there a point beyond which it just can't get any smaller and still contain all of the components that are required in order to make it work?
Nope, it just gets smaller and smaller forever until it's infinitely microscopic, and pretty soon you can't even see it, and it's mining like 1 billion bitcoins a second.
Yeah, I mean, it's still going to mine fewer bitcoins as the difficulty goes up, but, for the last 25 years, Moore's Law has continued to operate, and basically what the double SHA algorithm does is it puts us right above the edge of Moore's Law. So it can operate almost at Moore's Law efficiency in terms of improvement. And that means that your hashing power is going to more than double every 18 months in terms of what you can put out for a certain amount of energy and in a certain die size. And that is going to lead to ASICs that come out at 14 nanometers being 100 to 1,000 times more powerful than ASICs a couple of generations before them.
So we've been talking about this from the perspective of what's good for the network, but it sounds like what you're telling me is that even from a miner's perspective, unless you're planning on making a continual investment in ASICs, that ultimately it's a relatively short-term investment because the technology that's going to come out just a little bit after is going to, again, have that same sort of jump where you go from GPUs to ASICs or CPUs to GPUs, where the next level of the technology basically invalidates all of the previous levels of the technology because it's so much worse.
It reminds me of that ad where the guy's got the brand new phone, and as he's unpacking it, the truck goes by, which has the next generation brand new phone, and the daughter turns around to him and says, "You dummy, you bought the wrong phone."
You bought the wrong ASIC.
Yeah, exactly. It's like, yay, my new ASIC came. It's a year late. And by the way, the ASICs that are now on the market are doing 100 times the hashing power, and as a result, I'm generating pennies. So you're always going to be chasing the next generation of ASIC, which means that the incentives will drive you to centralize on those who have access. You could have the regional disaster literally affecting Bitcoin. Just like you had during the tsunami in Japan, it massively affected memory prices for over a year, and it also affected CPU prices. So you can imagine what would happen if all of the ASICs ended up coming from 3 fabs and one of those fabs was damaged or shut down.
Yeah, that's a great point.
Not enough baskets, people. Not enough baskets.
For anybody out there who has made an investment in ASICs or has been thinking about making an investment in ASICs, I think we'd be really interested to hear what you think about this continued progression of the technology, and if this is something, because again, when I initially looked at the Butterfly Labs ASIC technology, one of their claims was that ASIC is the pinnacle of efficiency. And so by buying this hardware, you are essentially buying your ticket for the foreseeable future into being a meaningful part of mining. And it seems like, given Moore's Law progression, that simply is not the case here at all. So again, very curious to hear why people made investments in ASICs, whether or not they also felt like it was a long-term investment they were making, or if it was something where they knew that they were going to have to be upgrading on an ongoing basis in order to participate at a high level.
The biggest problem in my mind is this. If the average person who adopts Bitcoin for the first time cannot mine without specialized equipment, that severely damages the adoption rate of Bitcoin. And I think the original adoption of Bitcoin progressed very rapidly because all new participants could CPU mine. And I think that is actually hurting the adoption of the currency now. And maybe a reason why you see other altcoins succeeding faster in some cases, because the average new user of Bitcoin cannot participate meaningfully in mining. And that's a bad thing for adoption.
Let's Talk Bitcoin is heard each week by thousands of people who are participating in the new digital economy. Our listener base of Bitcoin owners, miners, investors, technologists, and merchants is growing fast. We offer a limited number of short advertising slots in each show to keep our listeners engaged and to provide maximum impact for our sponsors. If you'd like to talk to us about Let's Talk Bitcoin, send us an email at sponsors@letstalkbitcoin.com.
If I showed you a website where you could easily purchase electronics from the world's largest distributor with Bitcoins at 0% markup, would you think it was too good to be true? Good news. It's real, and it's at bitcoinstore.com. Choose from 500,000 items, save money over Amazon and Newegg, and convert your Bitcoins to real-world items. You can even buy with privacy. All they need is a shipping address. But don't take my word for it. See for yourself at bitcoinstore.com.